It's December 2025, and the story we've been tracking all year in the Vancouver real estate market has officially hit a breaking point. What started as whispers back in the spring has now evolved into a full-scale crisis for developers across Greater Vancouver and the Fraser Valley. This isn't a slowdown, this is survival mode for most of the developers in the space. And what happens over the next 20 to 24 months is going to shape the housing landscape in this region for the next decade. If you're a buyer, a seller, an investor, or even just renting and hoping to get into the market, you need to understand what's actually happening behind the headlines. So let's break all this down right now. So you've heard me talk about shadow inventory before, those unsold completed condos that developers don't put on the MLS. So they never show up in the official stats. They're not in the new listings count. They're not in the months of inventory calculations. They sit completely invisible for the most part in the standard market reports that most people rely on. Now that shadow problem has been metastasized. As we close out 2025, we're looking at somewhere between 2,500 and 3,500 brand new completed totally empty condos sitting across Greater Vancouver and the Fraser Valley. These are not future units. They are done. Keys in hand, elevators are running, the lights are on in the lobby, and nobody is living in them. They are producing zero revenue and creating massive financial pressure on the developers who built them. According to the best data we have, this is now the worst oversupply we've seen in more than 25 years. Nothing in the last 2 decades comes close to what we're dealing with right now, and the number is still rising. Now, before we zoom into specific neighborhoods, I want to give you the big broad picture because the official stats and the shadow inventory story fit together. In November, residential sales fell to just 1,846 units. That's a 15.4% drop from November of last year, and it puts 2025 on track to become the lowest sales year in the 21st century. Lower than 2008, lower than 2018, and lower than the COVID years. And at the same time, inventory has surged. We're now sitting at 15,149 active listings. That's a 14.4% increase from last year and roughly 36% above the 10-year seasonal average. So we've got way more homes for sale and way fewer buyers actually pulling the trigger. With that much supply and that little demand, price pressure is inevitable. And the composite benchmark price has slipped to about 1.123 million, and condos, the product that drove a massive investor boom, have taken the biggest hit. Condo prices in Metro Vancouver are down 5.2% year over year to roughly 714,000. In the Fraser Valley, the correction is even deeper. From the peak of this cycle, condos out there are down well over 12%. This is no longer a cooling, this is not a soft landing, this is a real correction. Now let's stitch that together with what's happening on the ground in specific markets, because it is not evenly distributed. Some pockets are bruised while other pockets are being absolutely crushed. Let's start with Surrey Central. This is ground zero for the pre-sale crisis. You've got hundreds of tiny investor-grade studios and micro one-beds that were pre-sold at $1,200 to $1,300 a square foot just a couple years ago. Today, those same products are struggling to get around $800 a foot, and in some cases, even less. The math just does not work. A Surrey developer also brought in a one-day flash sale of 25% off units, which was something that we have never seen in the space. And you're not buying these as a home, you're buying these as a spreadsheet, and the spreadsheet has gone red. Rents haven't kept pace with carrying costs, insurance is up, strata fees are up, and rates are way higher than what was assumed when these contracts were written. There just isn't a deep pool of buyers willing to pay $500 plus for a shoebox in Surrey with a $2,700 a month payment and $1,900 in rent. The math just doesn't add up. And as we zoom over to Burnaby, Brentwood and Metrotown have the same story. You've got tower after tower loaded with investor-grade units. They were priced based on future values that never materialized. Resale product that's larger, brighter, and actually livable often trades at a lower price per square foot than the pre-sale product, and buyers see that. So absorption has fallen off a cliff there as well. Langley and Willoughby Heights got caught in the same wave. For a few years, it felt like there was a new launch every single week. Now you've got projects that have been listed, pulled, relisted, repriced, and they still aren't moving the way the developers' performance said that they would. Then we come back into Vancouver proper. Downtown Vancouver and the West Side condo markets, especially on the luxury and near luxury end, are taking a beating right now. Real concrete pain. You've got projects with beautiful finishings and great locations where developers are quietly offering up upwards of $300,000 in off-the-book discounts just to get buyers across the line. On the west side, there are high-end concrete builds where the original presale pricing simply doesn't work in today's mortgage environment. Units are being relaunched at lower numbers with credits, with incentives, and they're still not flying off the shelves. And then you have the Butterfly downtown. On paper, it was supposed to be an icon, a skyline-defining, architecturally significant tower that would set new benchmark prices for Vancouver. Instead, it has become one of the clearest examples of how overextended this cycle became. Construction challenges, legal issues, buyers panicking at completions as appraisals and financing don't match the original buy-in price, and it is a case study in what happens when you stack cheap money, FOMO, and unrealistic future price expectations. All of this sits on top of that massive pile of shadow inventory, those 2,500 to 3,500 unsold finished units across the region. So how are developers responding to this? With a level of desperation we have literally never seen before in this market. Let me give you a couple of real examples. In Kelowna, Mission Group ran a one-day flash sale at Alma on Abbott to try and blow out roughly 40% of the building that was still unsold. This is not a healthy, balanced project. That is a fire sale. Another developer rolled out a live free for a year incentive where they were offering to cover the buyer's mortgage, strata fees, and property taxes for 12 months. That's up to $50,000 in carrying costs just to get someone to take the keys. And in Surrey, we've seen a developer offer a buyback guarantee, promising to repurchase the unit at the same price if the buyer wants out at completion. Think about just what kind of balance sheet you need and what level of fear you are carrying to put that in writing just to keep deals alive. On top of that, you've got all the other incentives that are being thrown in: free parking, free storage lockers, air conditioning upgrades, cashback credits on completion, 12 to 24 month buy downs, and better assignment terms. During the pandemic boom, you couldn't even get a floor plan half the time. Now they're throwing the kitchen sink at you just to get you under contract. These incentives aren't creativity, they're a signal. This is what panic looks like on the developer side of the table. And the pain doesn't stop at the sales center. This slowdown is now creating a cascading economic impact that we're feeling across the province. Developers are laying off staff across the board, and it's not just the sales rep in the sales center. It's the project managers, it's the construction coordinators, it's the marketing team, and it's the site supervisor and the trades. When developers stop building or a slowdown dramatically happens, it hits the plumbers, electricians, framers, drywallers, flooring installers, concrete suppliers, lumber mills, everyone in that chain. Construction is one of the largest employment sectors in British Columbia, and when it stalls, the entire provincial economy feels it. Lower employment means lower tax revenue for cities. Lower revenue means infrastructure projects get delayed, civic upgrades get pushed, and you end up in a feedback loop that policymakers are very, very nervous about. And this isn't just a housing problem, this is an overall economic problem that we all face here in British Columbia. Now, underneath all of this is the central tension that's going to define 2026 and most likely 2027 as well. Who blinks first? Is it the developer or is it the buyer? From the developer side, they are terrified of dropping prices too far. If they cut deeply enough, they risk breaching their loan covenants, blowing up their pro formas, triggering new appraisals from their lenders, and losing their financing completely. For some projects, that would mean immediate failure. They literally cannot slice 10 to 15% off every single unit on paper without nuking the entire capital stack. On the buy side, you've got one of the slowest sales environments in decades and a ton of visible and invisible supply. The sales to active listings ratio in Greater Vancouver is sitting around that 12% range, and in the Fraser Valley, it's closer to 11%. So we're just teetering on those buyer market conditions, and in some pockets, they are even single digit, 8, 9%. I've seen as low as 4% sales ratio, so very heavy buyer conditions right now. Buyers see the oversupply and they see the prices that have been ticking down month after month, and they've watched interest rates go up and then start to soften. They've listened to all the noise about the market crashing, flattening, bouncing, whatever the media portrays, and at the end of the day, they can see the value difference between a large, well laid out resale unit than a tiny investor box with a rooftop yoga deck. So they have absolutely no incentive to pay a premium for any single unit here in 2025 or in 2026. If you're watching this as a buyer, especially for a condo, this is the strongest negotiating position you've had in the last 15 years. The playbook in this kind of market is very simple, but it requires conviction. Number one, focus on completed inventory. That's where the actual pain is. Developers cannot sit on these units for another 6, 12, 18 18 months without real consequences. Every month they hold those doors closed, they bleed more interest, more taxes, more strata fees on their unsold share. Number 2, negotiate aggressively. And I don't mean just ask for $5,000 off. I mean, ask for real price reductions. Ask for credits on completion. Ask for upgrades baked in, and ask for rate buy downs if that's possible. You can even ask for lower deposits, which is very advantageous, and ask for your assignment rights back and crossed off in the contract itself. And most importantly, ask for that flexibility on those completion dates. This is the moment in the cycle where you can ask for things buyers were laughed at for during the boom, and now the tables have turned. You're not being greedy, you're simply matching your offer to the risk you're taking and the reality of this market. Number 3, don't ignore distressed projects. When you see a project like Belvedere go into creditor protection, that's a signal. It means there are going to be opportunities for buyers who are prepared, who understand how to underwrite these deals, and who can move decisively when the right one appears. Now, I want to tie this back to the resale numbers quickly because they matter for context. With sales at 1,849 in November, condo prices were down 5+% in Vancouver and down more than 12% from the peak in the valley. Inventory 36% above the 10-year average, and a sales to active ratio hovering in the low teens. It's very clear we are in an extended correction phase, but that doesn't mean run for the hills and never buy. It means the power dynamic has shifted. In 2020 all the way to early 2022, the seller was in full control, and from 2024 into 26 and 27, the buyer is. So here's my honest take as we head into 2026. Developers on the wrong product in the wrong locations with the wrong capital structure are going to continue to get hurt. That includes a lot of investor grade presale product in Surrey Central, Brentwood, Metrotown, pockets of Langley, and some of the luxury condo product downtown and on Vancouver's west side that was priced purely on hype. First-time buyers and upsizers who are willing to step into the noise, look at the data instead of the headlines, and negotiate based on today's reality rather than yesterday's peak are going to be the winners. You're going to see more distressed sales, you're going to see more court-ordered listings, and you are going to see more quiet discounts on developer inventory. And what do I mean by quiet discounts? I receive calls and texts all the time from sales centers that are offering discounts, and in most cases, they don't want to put it in a text or in an email because they don't want to have anything done on paper to degrade the value. But there are big time discounts, especially in the Vancouver markets, and if you're wanting some of those discounts, just reach out to me, shoot me a text or email, and I can get in touch with you for that. And when you zoom out 10 years from now, this 12 to 24 month window is likely going to look like one of the few real opportunity zones of this cycle. Within the chaos, there's opportunity, and the worst thing you can do is wait for some perfectly stable market where everyone feels good again. By the time the feelings catch up, the discounts are long gone. Leaders move in uncertainty, followers move in comfort, and in this market, you don't get to do both of those. So if you're thinking about buying in 2026, especially in the condo space, this is the moment to get educated, get your financing sorted, and get really clear on what value looks like, because the leverage for now is in your hands. And if you need help to break through that noise, book a call with me, a discovery call. You can do that by scanning the QR code in the banner. My link to my calendar is also in the description below. Also download my home buyer and seller blueprints. Thanks again for your support, and I will see you on the next one.